Hello and a warm welcome. You've joined us in Market Cafe right here on ET Now. I'm Ashesha Adwaryu and with me is Kanishka Sarkar, who is joining us from our Delhi studio. And this is a show where we take you through all the cues that we are getting from global markets overnight, which are the stocks that you need to keep an eye out on, either based on news or brokerage reports. And we'll get you all other stories that you ought to know this Friday morning. But Kanishka, let's get started with how global markets performed yesterday. And it turned out to be a good day for the US markets, isn't it, on the back of strong macro data?
That's right. Hi, Ashisha. Very good morning. Well, it's been a pretty good session on Wall Street. It was a winning session. Now, a batch of earnings and economic reports, they pushed the S&P 500 to a record close level. The S&P 500 finished 0.5% higher, closing at a new record after hitting an all-time high during the session also. Now, the Nasdaq Composite, that gained about 0.7%, also reaching a fresh intraday high and a closing record. The Dow, on the other hand, climbed about 0.5%. If you take a look at specific companies, the shares of streaming giant Netflix, they fell more than 1% in extended trading following its latest quarterly results. Now, the company has posted an earnings and revenue beat for the second quarter and raised its full year guidance for the revenue as well. Meanwhile, there's PepsiCo and United Airlines. Their shares both popped after respective companies beat analyst estimates on earnings. Those followed solid results from big banks like JP Morgan and Goldman Sachs earlier in the week. Now, the index has also moved higher on a notable economic data, which signaled that the US economy was holding up well. Initial jobless claims for the week ending July 12th, they decreased from the prior week, and June retail sales data that also surpassed expectations. Now, all the major averages are on pace for a positive week, with the S&P 500 up 0.6% through Thursday's close, and Dow on track for a 0.3% advance, whereas the Nasdaq, that's the outperformer, heading for a 1.5% gain. So that's how largely the US market setup is looking like. But how are things on the crude front?
Crude has also begun on a positive note today. It is gaining nearly 0.15% as we speak to trade near that $69.7 per barrel mark. Remember, it is gaining for the second consecutive day, so we have seen positive momentum coming in for the oil market. Now, as far as weekly moves are concerned, remember it is on track to snap 2-week gaining streak, and Brent crude is now down nearly 1% for this week so far. Although it is gaining for the second consecutive day, for the week we have seen some kind of declines come in for the oil market. Several factors continue to remain at play. One, of course, is crude supply, which is expected to remain tight for the next several trading months. And apart from that, a lot of macro data that came in from US, which pointed towards strong US economy, and that is also the reason we saw some kind of uptick in the oil market. Remember, oil yesterday was trading at about $69, and today it has inched up higher to trade near that $69.7, $69.8 per barrel mark. But let's also put the spotlight on the oil market then. Although it is absolutely flat today, trading near $3,340 per ounce mark. Remember, it is also on track to snap its 2-week gaining streak, and oil this week has shed nearly 0.5% this week so far. But yes, Kanishka, several factors continue to remain at play for the commodity market, but oil continues to remain in focus, although gold is absolutely flat in today's trading session.
All right, so oil continues to be in focus and gold is trading flat as of now. But let's shift focus to the Indian markets as well. Now, the Dalal Street, that ended lower yesterday, snapping a 2-day winning streak. Nifty closed in the red, led by weakness in IT, PSU banks and private bank stocks. Broader indices, they also underperformed, with both mid-cap and small-cap closing in the red. Now, let's go across to Snehi to give us a roundup of yesterday's market action.
Well, yes, good morning. Slightly tempered expiry for us yesterday. A 0.4% cut is what we've seen on the benchmarks, Nifty as well as Sensex. Nifty managed to hold on to the 25,100 mark, but quite significantly lower than the day's highest point of more than 25,200. So that was a 100-point cut on the spot basis coming in for the Nifty yesterday, a 0.4% cut coming in for the Sensex as well. It was Nifty Bank too that has taken the beating in yesterday's trading session, and select PSU banks which are doing well over the course of the week were knocked out in yesterday's trading session. Even the broader end of the market was in the red, albeit the cuts were lower, slightly lower than the benchmarks. So Nifty, mid cap and small cap have both ended in the red in yesterday's trading session as well. The advanced decline ratio was quite even, Steven. So the India VIX spiked up very nominally, but very flattish moves coming over there as well. It was names like some of the Tata group of names like Tata Steel, you had Tata Consumer that were doing well. So the entire metal pack, the consumer pack, those stocks were in focus. Pressure continued to build on Tech Mahindra. So well, that was a stock that was slightly under pressure in yesterday's trading session. Tata Consumer being the top Nifty gainer, with Tata Tech being the top Nifty loser in yesterday's trade. If you take a look at some sectoral moves, you had good moves coming in from realty, metal, consumer durables, pharma, FMCG, all of them seem to have done well. What did not do well yesterday was the entire PSU banks. IT continued to be a laggard yesterday. Oil and gas was slightly under pressure, and so was financial services, along with private banks and PSU banking names. If you take a look at the key levels to watch out for in today's trading session, the immediate support is still being spotted at 25,100 by our expert Sharan Linane, so watch out for that level. And Nifty Bank also not much action expected after the consolidation we've seen today. So well, yes, keep a close eye on this level. And last trading day of the week after the expiry that was largely consolidating. Let's see what today's trading session holds for us.
Okay, so those are some of the key levels that you need to keep an eye out on. And remember, Nifty shed nearly 100 points in trade yesterday to end near that 25,111 odd levels. But how is the FNO setup looking like for today's trade? Sharad is now joining us to fill us in. Sharad?
A volatile trade yesterday made sure that Nifty and Nifty Bank both ended in the red. Now looking at the FNO positioning for today, the India VIX level that is also comfortably below alarming levels, that's also coming in below 11.5 levels. The PCR changes, that's also comfortable, be it for Nifty and Nifty Bank. This range is between 0.69 to 0.78. Now looking at Nifty itself, the index futures, the activity of short build-up has started taking place. The change in open interest roughly 2.6%, while the most active strike price for Nifty weekly expiry, that's 25,500, where we're seeing the maximum call writing happening, and the second level 24,900, where the maximum put writing is occurring. The highest open interest strike price, put is 24,000 and call is 26,000. Moving ahead for Nifty Bank index features, there is also a short build-up occurring. Change in open interest is on the lower side, but the highest OI strike price, that's put, is 56,000 and call is coming in at 57,000. But of course, Nifty and Nifty Bank are still in a small range, and of course we might be seeing a little bit of consolidation happening after 2-3 odd sessions of growth in both these indices. Now FI long position trade, that has actually significantly come down. Yesterday was 18.21%. Now it is below the 17% mark as well. So will this be a bottom? That's a question to be asked. DI long positioning, that has actually gone up from 67.9 to 69.2 odd percent, and the retail position is slightly above, but almost you could say flattish. So of course FI movement, especially on the long positions coming down, that is something to watch for as we are tracking global cues and earnings.
All right, so that's how the F&O setup is looking like. But Sharad, stay on with us. We are also joined by Abhishek, Varun and Srishti from our team to give us a roundup of all the stocks that are likely to buzz in trade today. Abhishek, let's start with you. Which are the stocks on your list?
So yes, let's start with the Wipro. So Wipro has reported its Q1 numbers. Numbers are broadly in line with the estimates. Post Q1 result, the management has guided for a -1 to 1% kind of a revenue growth for Q2, indicating that the management is expecting some kind of a sequential revival in its performance in Q2. Further, the management is expecting H2 would be better than that of H1, and the key highlight in this performance is that strong growth in its TCV. So TCV has grown by almost 25% QOQ, supported by the few of the large orders, although it may have some kind of impact on its margin. Based on this kind of a performance, although there is no major earning upgradation is expected, but given that the performance is prima facie appears to be an outlier amongst the IT tech, stock may react slightly positive to neutral. Other than that, Axis Bank has also reported its numbers. Numbers were quite weak, but the weakness is mainly due to the change in its accounting policy. So now the management has tightened its NPA recognition policy and assessing whole of its books, because of that, the slippages have increased and there was some kind of a pressure on its credit policy. Although it appears to be a one-time exercise, but it may have some kind of impact on its performance or its financials. So as long as this one-time cost will not get absorbed, it's not expected a material upgradation in its earnings, and because of that, stock may remain range bound with a negative bias.
Okay, so weak set of numbers from Axis Bank, but commentary from Wipro continues to remain very strong, where they're expecting the second half of this year to be better than the first half. But Sharath, you tell us, several other companies reported their numbers. How were they?
From the earnings pack, first we are having LTI Mindtree, largely inline set of decent numbers coming in the first quarter. Interestingly, the EBIT margin that has expanded almost 50 basis points on a sequential basis, coming in at 14.3%. Now, revenue came in at a roughly $1153 million, and that was also in line with the overall street estimates. And of course, over the last 2 years, LTI Mindtree was facing some pressure in the industry, but under the new management, it seems that the stock might gather momentum. Also, IHCL, neutral set of numbers coming in, mixed quarter. Impact of border tension and flight delays were seen in the occupancies, but the ARR, the average room rentals, and the RevPAR, they are still positive. Revenue EBITDA is in line. PAT margin has missed estimates. And lastly, Tata Communications had been focused. Weak set of quarterly numbers coming in, and the net profit that is down almost 82% on a sequential basis. And also, interestingly, the company will be raising roughly 1,000 crore rupees via NCDs.
All right, so those are all the earnings counters that we'll be tracking in today's trade. But Srishti, now coming to you, very good morning. You've picked out Lupin and SIAT for us. What's the news flow here?
Well, good morning. Firstly, on the Lupin side, what we are getting to understand that there's one positive and one negative news flow, where on the positive side, Lupin has achieved the GMP certification from Australian Authority for one of their API facilities. That is indeed positive. But on the flip side, the negative news flow is actually the observations received for their Pithampur Unit 2, where the company has received observations with a Form 483 as well. And do remember that Pithampur is one of the key facilities for Lupin. So let's have all eyes on that. But on the other hand, SIAT will be in focus on the back of the earnings. If we see this time around, though the revenue has come in line to the street estimates, but there's a slight miss on the EBITDA as well as profit figure, wherein the profit has actually seen a decline of 9% on a YY basis. The EBITDA has seen a growth of 2.5% on a YY basis, but that's marginally lower than what the street was penciling in, though the top line, which is standing at 3,521 crores, stands in line. But the other part is actually the miss on the gross margin front, because do remember the management has been highlighting the fact that they are expecting the margins to improve given the raw material cost inflation and the basket overall impacting the numbers. But this time we have seen a contraction in the gross margins, and it's a 70 basis points of decline on a sequential basis and 250 basis points of contraction on a YY basis. But along with that, the company has also announced a capacity addition for one of their plants, and that's why this particular stock will be in focus today.
Set of numbers coming in from SIAT, and several other pharma stocks are also in focus. But Varun, good morning. You tell us which stocks are on your radar this Friday morning.
Good morning. So keep an eye on textile stocks, keep an eye on United Spirits as well, because what we learn from our sources is that India and UK are likely to sign the free trade agreement next week. The agreement is likely to be signed after a review process of legal scrubbing of the FTA text. So keep an eye on textile stocks and United Spirits as well, because they could react positively on this news. Keep an eye on Geo Finance, because the company has reported its number. The numbers are almost mixed bag, because if you look at the net interest income, that is up by around 63% on a YOY basis, but on a quarter-on-quarter basis, it is down by around 1.5%. The profit growth has been in low single digit. On a year-on-year basis, it has been around 3.9%, and on a quarter-on-quarter basis, it has been around 2.7%. The overall AUM for the AMC stands at around 17,876 crores, and Geo Credit Limit AUM has increased by around 16% on a quarter-on-quarter basis, and on a year-on-year basis, there has been an exponential rise. The PPOP, that is also up by around 8% to around 366 crores. Also keep an eye on HL, because the company has received the first set of wing assemblies for the LCA Tejas Mk1A from L&T, and this is a good news for HL, so keep an eye on HL as well.
Okay, so those are the stocks that we will be tracking today. Thank you so much, Abhishek, Srishti, Sharad, and Varun for joining us and taking us through the list of all the stocks that are expected to buzz in today's trade. Thank you so much. But moving on to decode the market setup further, we are now joined by Sunil Subramaniam, who's a market expert. And very good morning, Sunil. So, how is the market setup looking like to you today? You know, when we talk about the global markets, it's been a winning session on Wall Street. Do you think that impact is going to follow on for the Indian markets as well today?
I think so, because after yesterday's correction, I think there will be a kind of bounce back. And I think the Wipro earnings, I think the IT sector has been under pressure because of the TCS results. But I think Wipro's good guidance for the future should give some comfort there, as well as LTM Mindtree. So I think as the earnings season is panning out, you're seeing that IT is holding up, so which has been an underperforming sector. So I expect that to kind of start picking up on a relative valuation basis. We'll also look at the banks. I think the Axis Bank was a one-off NPA provisioning change in norms that they did. Otherwise, the banking results have been okay. We've got to look at credit growth and consumption growth, how they happen. But otherwise, I think that today's market should see stabilization compared to yesterday.
Okay, and I wanted to scratch that point further on IT earnings. Most of the large cap and several mid cap IT companies have now reported their numbers, and we've seen some kind of positive commentary that came in from Wipro, where they say that the second half of this financial year is expected to be better than H1. How do you read this, and how do you expect the stock to react? In fact, not just Wipro, the entire IT sector.
See, I think the IT sector has been oversold for quite some time. If you take the year-to-date numbers, it's underperformed the Nifty by a huge margin. So I think that there's due for a catch-up. But what is preventing that catch-up is the fact that FIs are not yet warm towards India. I think they are still, from a valuation perspective, looking at China and emerging Europe as a better bet. The US, of course, continues to be strong for them. So the earnings season there also has been good. So I think that what's happening is that FIs have not come back strongly, and that's why the IT sector has been under pressure. Now, as the result season is coming and the links are looking better, I expect that when the FIs return, IT will be a favored pick for them. So I would say that we'll wait. I think the big Infosys number is still due on the 23rd. So probably you will get a clear direction after those numbers and the guidance they give. But I think that, like I've been saying for some time now, IT is due for a pullback over the medium term.
All right, so IT is due for a pullback over the medium term. That's the view coming in. But Sunil, now talking about the capital goods sector as well. Now, ABB Global, that reported its earnings yesterday, and despite that 9% downtick we saw in the order intake for India, the stock did rally yesterday. Not rally, but it did see significant gains. So was the picture for Thermax. So do you think we are up for another rally in capital goods stocks basis the private capex that has gradually started to pick up?
I think so, because you see what's happened is that private capex is waiting for the capacity utilization to build up. But you can slowly see the green shoots there starting. See, urban consumer demand is still showing to be weak, but rural consumption, because of the monsoon, is picking up. And that augurs well for the capacity utilization, because rural is all small ticket numbers which build up the volumes. So from that point of view, I think especially the flows from domestic mutual funds and insurance companies are what are going to drive the market until the FIs come back. And their focus is clearly going to be around the domestic scenario, where the capital goods sector is up in front center. Because any export-oriented international sector will wait for the tariff and the PTA to come. So domestic fund managers would hesitate to take a call on any external oriented. And when they focus their energies, you're seeing that the flows are continuing to be strong. In fact, I think the mutual funds have also over the last 2 months deployed heavily their cash balances. So from the point of view that domestics, as long as they are driving the market, you'll see domestic oriented like capital goods do well, because the outlook is that over the next year and a half, private capital should generally bounce back and pick up.
Mr. Subramaniam, thank you so much for taking your time out and joining us here on ET Now and helping us decode several stocks and sectors that will be in focus today and how they are expected to react in today's trading session. Thanks so much for joining us. But shifting focus then, which are the other cues and events you should keep your eye out on in today's trade? Snehi is now joining us with that.
Well, yes, lots of cues to watch out for. Not much happening on the macroeconomic front back home. But from the US, all eyes are going to be on the University of Michigan consumer sentiment. That's an important gauge of how the consumers of the economy or the public are viewing the strength in the economy and their confidence. And from Japan, you have CPI, so the inflation print in the form of CPI will be coming out. Moving away from that, in terms of global earnings, you have Amex, that's American Express, along with 3M, that will be coming out with its numbers. In terms of quarter one earnings back home, all eyes are going to be on Big Boy Reliance. We're expecting a decent set of numbers this time around, wherein retail is expected to do very well. Other than that, JSW Steel also expected to come out with its numbers later in the day. Other than that, from the broader end of the market, names like L&T Finance, MRPL, Bandhan Bank, India Mart, IOB, Hindustan Zinc, and a whole host of other stocks will be in focus on the back of their quarter one earnings. Let's talk about some corporate action and board meetings. A whole host of stocks will be trading ex-dividend, the likes of Happiest Minds, HCL Tech, Birla Soft, Kotak, Jubilant, Mahindra Life Spaces, Bajaj Electricals, Cummins, Aegis, that list goes on and on, so watch out for all of these stocks. In terms of AGMs, Nippon Life India, which is NAM India, Nippon Life India AMC, IFL Finance and Shriram Finance will be holding their AGM, so those stocks could be in focus as well. And lastly, in terms of other events, we understand from reports that PM Modi is going to be making a visit to Bihar and West Bengal, so watch out for all of these cues, all of them very important to track.
All right, thanks, Nehi. So those are all the cues that we will be watching out for today. But with that, it's time to take a very short break. But before we slip into the break, it's time to take a look at something very special. Now, it's been a roller coaster ride for the world, and get Indian benchmarks. They have been range bound, 0.5%. But on the flip side, we have Hang Seng Index. That one is holding on to some gains, up 1.2% as we speak. 300 points higher for Hang Seng Index. We have Shanghai, which is also up 0.3%. ASX 200 is also gaining nearly 0.7% in trade today. Although Gift Nifty is absolutely flat, up just marginally by about 15 odd points to trade near that 25,190 mark. Kanishka. That's right. So that's how the market setup is looking right now for India. But moving on to some more stories. Now, India has clearly given a statement that it is not going to bow down even if there are sanctions. We heard comments made by MEA and Oil Minister Hardeep Singh Puri on defying if at all there are US sanctions in place. Now, to decode this further, Sumita is now joining us. Sumita, over to you.
We heard the bites of both the Oil Minister, Union Oil Minister Hardeep Singh Puri, and of course the MEA spokesperson Ranveer Singh Jaiswal, both outlining India's larger foreign policy and overall strategy when it comes to oil and its own interests. Number one is the fact that we will continue to buy oil from our diversified sources as long as they serve India's interests. So we will not be bowed down. We will not be pressurized by any bloc, whether it is the Western bloc of countries or the NATO bloc. And more importantly, after this statement was made by NATO chief, after Donald Trump suggested that there could be additional sanctions on countries, secondary sanctions on countries who continue to trade with Russia, including buying oil from Russia. After that statement came, the NATO chief, Mark Rutte, stated that it's going to hit countries like India, China very bad. Now, there have been several questions that have been raised on Rutte's comments. First things first, that why are these comments coming in on sovereign countries like India, and why are they coming from the head of a military alliance? And secondly, it raises questions about propriety and, of course, an overreach of diplomacy in this matter. And, of course, the third point being the fact that why are there double standards? Because European countries themselves, they continue to buy oil, but why does the hammer always fall on India? And India is not going to bow down to any pressure from the West. And, of course, that was reiterated both by the MEA spokesperson and Minister Hardeep Singh Puri. The MEA spokesperson categorically stated, with respect to the double standards that have been maintained by the West, he stated that we caution against double standards on the matter, and we are guided by what's on offer in the markets and by prevailing circumstances.
Sumita, thanks so much for joining us with all those details. But shifting focus then, Ashish Chauhan, MD and CEO of NSE, on the occasion of his book launch, spoke exclusively to ET Now's Anurag Shah on the do's and don'ts of investing. He also explained how patience is the key to successful investing. Listen in.
कई बार हम लोग निवेश को एक तरह से समझते कि सुबह खरीद कर शाम को बेचने का निवेश कहते हैं, क्योंकि टेलीविजन पे, व्हाट्सएप पे, एसएमएस पे आपको रोज 50,000 मैसेज आते हैं, और जब हमको टेलीफोन खरीदना होता है, मोबाइल फोन, तो भी हम 25 जगह पे कंपेयर करते हैं कि भाई ये 15,000 रुपये का, ये 5,000 रुपये का है, सेम चीजें मिल रही है, तो मैं 5,000 रुपये के क्यों ना खरीदूं। लेकिन जब हमें 1 लाख रुपए का कोई निवेश करना है तो हम टिप पे भी कर लेते हैं, या तो टेलीविजन पे सुन के या अखबार में पढ़ के कर लेते हैं। तो मुझे लग रहा है कि जो अपना धन हमने बचाया हुआ है, बड़ी मेहनत से या तो हमारे पुरखों ने बचाया हुआ है उसकी वृद्धि हो, वैसा हमें करना चाहिए और लंबी अवधि के लिए निवेश करना चाहिए। जो ट्रेडिंग करते हैं सुबह शाम, जो आपने टैक्सी ड्राइवर की भी बात कही, तो क्योंकि वो सक्षम नहीं है, हो सकता है उसके पास पहले पैसे होंगे लेकिन वो ट्रेनिंग नहीं मिली थी उसको, या तो वो मॉनिटरली सक्षम नहीं थे, तो उनको लंबी अवधि के लिए निवेश करना चाहिए। और जो एक्सपर्ट नहीं हो तो डेरिवेटिव्स तरफ जाना ही नहीं चाहिए। बिल्कुल, आपको कितना भी प्रलोभन हो जाए आपको डेरिवेटिव्स नहीं करना चाहिए, लेकिन सुबह खरीद कर शाम को भी नहीं बेचना चाहिए। आपको समय नहीं है क्योंकि आप टैक्सी कर रहे हो या कोई और काम कर रहे हो या कोई दुकान चला रहे हो या कोई ऑफिस में नौकरी कर रहे हो, तो आप म्यूचुअल फंड के माध्यम से भी आप निवेश कर सकते हो, आप पोर्टफोलियो मैनेजर के द्वारा भी निवेश कर सकते हो, आप फाइनेंशियल एडवाइजर की भी एडवाइस ले सकते हो क्योंकि वो एक्सपर्ट है। तो आप जैसे खुद की दवाई नहीं करनी चाहिए, बिल्कुल वैसे ही आपको कई बार पता नहीं है तो निवेश भी खुद कोशिश नहीं करनी चाहिए। और कतई सुबह खरीद के शाम को बेचना कोई निवेश नहीं है, उसको सट्टा कहते हैं, ट्रेडिंग कहते हैं, उसमें आपका पैसा जरूर जाएगा।
All right, patience is the key to successful investing. That's the word coming from NSE CEO. But now shifting focus to some more national stories, Prime Minister Narendra Modi will visit coal-bound Bihar today to launch several infrastructure and development projects. This marks his 5th visit to the state ahead of the elections as the BJP sets up its campaign in Bihar. The Supreme Court is set to resume hearing in the case of Kerala nurse Nimisha Priya today, who is on a death row in Yemen. The hearing follows a recent development where her execution, initially slated for July 16th, was temporarily postponed.
And ahead of Independence Day, the NSG carried out a mock drill in Delhi to assess anti-terror preparedness. The exercise aimed to ensure swift response capabilities in case of any threat. And shifting focus to some global stories then, first-time applications for US unemployment benefits fell by 7,000 to come in at 2,21,000 for the week ending July 12, according to Labour Department data. The 4-week average stood at 2,29,500. Continuing claims, which reflect the number of people still receiving unemployment benefits, were little changed at 1.96 million. While weekly claims are stabilizing near pre-pandemic levels, continuing claims remain elevated, signaling that many unemployed workers are struggling to find new jobs amid a cooling labour market.
Fed Chair Jerome Powell has responded to White House questions about the central bank's pricey headquarters renovation. In a formal letter, Powell denied claims of VIP perks like rooftop gardens or private elevators and pointed to a new transparency page on the Fed's website. But this is a part of a deeper feud as Trump ramps up pressure on Powell to resign over the Fed's refusal to cut interest rates. San Francisco Fed's Mary Daly says that the U.S. economy is in a good place, but the Fed must finish the job on inflation. Daly signaled support for 2 rate cuts this year, warning that holding rates too tight could hurt jobs. But Fed Governor Kugler disagreed, urging patience amid rising inflation from Trump's new 20 to 40% baseline tariffs on key trade partners.
A landmark win for cryptocurrencies. The US House has passed a sweeping stablecoin bill, sending it to Trump, who is expected to sign it into a law. The bill mandates stablecoins be backed by liquid assets and monthly disclosures. 2 other crypto bills also cleared the House. One sets up broader regulations and the other bans a US central bank digital currency. Trump is turning up the heat on renewables. In a major policy shift, US Interior Secretary will now personally approve or reject wind and solar power projects on federal land, adding new bureaucratic hurdles. The administration says it is leveling the playing field for coal and gas, but the industry calls it blatant obstruction. It's the latest blow to clean energy under Trump's push for fossil fuel dominance.
Japan's inflation cooled in June, offering some relief after months of elevated price pressures. Headline inflation dipped to 3.3%, in line with forecasts, as rice prices, which were up over 100%, finally eased. But it's not all good news. Core inflation, a key gauge for the Bank of Japan, inched up to 3.4%. With tariffs looming, the BOJ may hold rates steady, despite inflation staying above target for over 3 years. The US has hit Chinese graphite with a 93.5% anti-dumping tariff, pushing total duties to 160% on a key EV building material. The Commerce Department found Chinese firms were unfairly subsidized, backing a US industry petition. The move tightens an already strained EV supply chain and escalates trade tensions amid China's own mineral export controls.
Chip giant TSMC posted a 61% profit surge in the second quarter, fueled by demand for AI processors from Nvidia and Apple. Revenue also beat forecast as advanced chip sales drove 74% of the revenue. With AI tailwinds, TSMC now sees full year 2025 sales growing 30% in US dollar terms. Netflix's final season of Squid Game drew 122 million views and helped beat second quarter earnings forecast. The streamer raised its 2025 revenue outlook to as much as $45.2 billion, citing solid subscriber growth and ad sales. Yet, shares dipped in after hours trade, with some calling the new guidance too cautious.
PepsiCo is scrubbing artificial dyes and flavors from Lay's and Tostitos, rebranding its iconic snacks with cleaner labels later this year. The move aligns with pressure from US Health Department and a movement to ditch synthetic additives. The chips will also shift to olive and avocado oils. Meta's Mark Zuckerberg and top executives have struck a surprise settlement to end an $8 billion trial over Facebook's privacy failures. The deal halts shareholder efforts to make them personally pay for fines like the $5 billion hit from the FTC. The terms haven't been disclosed yet, but the trial was abruptly adjourned just before big names were set to testify.
And shifting focus to some other stories then, we are learning from exclusive sources that India and the UK will sign the free trade agreement next week. My colleague Sumita Karir is now joining us with more details on this. Sumita?
We're given to understand from government sources that India and the United Kingdom are likely to sign the free trade agreement with both the sides concluded in May next week. This agreement is likely to be signed after a review, and the process of legal scrubbing of the FTA text is currently on. Remember, India and the United Kingdom finalized a landmark trade deal on May 6th following 3 years of intense negotiations. In fact, the multi-billion-pound agreement, which reduces tariffs of traded goods, it aims to bolster both economies amidst the ongoing global trade challenges. Now, once the FTA is signed, it will require an approval from the British Parliament and India's cabinet before it can take effect, as experts tell us. In fact, as part of the deal as well, it removes taxes on the export of labor-intensive products like leather, footwear, clothing, while making imports of whiskey and cars from Britain cheaper, and this in a bid to double trade between India and the UK by 2030. Remember, this is also poised to enhance Indian export potential, improve the mobility of skilled workers, and provide British businesses greater access to India's expanding middle-class market.
Okay, thanks, Sumita. All eyes are now on the India-UK trade deal next week. But on that note, we'll take a very short break. Be right back with more on the other side.
From managing wealth to headlines, he has shaped investment journeys across India. And now he is curating the newsroom. His views moves markets. And this time, he is setting the agenda.
Hi, I'm Swarup Mohanty, the guest editor on ET Now. Catch me on 21st July, leading the conversation.
When the stakes are high and the answers are
Gross NPAs, they have gone up from 1.28% to 1.57%, and same is with the net NPA, which have actually risen. The overall slippages, they are up by around 70 to 71% on a YOY and quarter-on-quarter basis, and also the provisioning has doubled on a YOY basis, and also on a quarter-on-quarter basis it has risen sharply. And the company says that because of a technical adjustment that the company has done, which the company has actually told in last quarter, the overall asset quality has deteriorated, and also there is an increase in slippages and provisioning, which has also impacted the profitability of the company, which is down by around 3.8%, and this has also impacted the net interest margins of the company, which is down from 3.97% to 3.8%. Also for the net interest margin, the company says that because of the 100 basis point rate cut the RBI has done, it has impacted the overall net interest margin, but only 25 basis point has been totally passed on till last quarter, and the 75 basis point is yet to be passed on. So that means you might see more pressure on the net interest margins going ahead. Other than the technical adjustments, if you look at the NII, that is up by just around 0.8%, and also if you look at the advances and deposit growth that are in single digit, and this is the third straight quarter wherein the advances growth and deposit growth has been in the single digit. Also the CASA ratio that has declined from 41% to around 40%. So it has been a weak quarter for Axis Bank. All the parameters are weak, especially because the weakness is basically because of the technical adjustment that the company has done, and this time the technical weakness is not on charts, but it is on the fundamentals, the books of the company.
Numbers coming in from Axis Bank, the stock will be in focus as it will react to its numbers. But it's not just Axis Bank. Wipro also reported its numbers, and it was a mixed set of numbers for the first quarter. Profit for the quarter for Wipro fell nearly 7% to come in at 3,330 crores compared to last quarter, but managed to beat street estimates. Meanwhile, revenue came in line with what the street was working with at about 22,130 crores, a decline of about 1.5% compared to last quarter. Pulkit is now joining us to do all the number crunching for us. Pulkit?
Wipro has released its earning, and if we talk about the numbers, the revenue stood at around 22,135 crore, which is around minus 1.7% down Q-on-Q basis. If we talk about profit after tax, it stood at around 3,330 crore, around minus 6.7% down Q-on-Q basis. If particularly we talk about IT services segment revenue, it stood at around $2,590 million, a decrement of around minus 0.3% Q-on-Q basis. If we talk about IT services revenue in INR terms, it stood at around 22,080 crore, which is around minus 1.6% Q-on-Q basis down. If we talk about the total contract value, that is the deal wins, it stood at around 4.95 billion, which is up around 24% Q-on-Q basis. If we talk about attrition, it stood at around 15.1%, which is nearly same as previous quarter. If we talk about headcount, it is around 2,33,232 and nearly same as previous quarter. A very slight difference, that is around 124. If we talk about the scorecard as per the ET Now estimates, the revenue is in line, the PAT is above, and the EBIT margin is in line.
All right, so that's how the numbers are looking for Wipro in Q1. Thanks, Pulkit, for taking us through that fine print. But let's also listen to what the Wipro management has to say, which is betting big on AI capabilities.
Our AI capabilities are integrated into both industry and cross-industry solutions. So by combining domain expertise with AI, we are able to deliver value through solutions such as hyper-personalized wealth management for our BFSI clients, predictive industrial insights for our manufacturing clients. So far, we have deployed over 200 AI-powered agents using advanced technologies from our leading hyperscalers, who are big partners. Just to give an example, these agents enable smarter lending, intelligent claims processing, and autonomous network management. While we are cautious given the macro environment, our strong order book, healthy pipeline, and focus on AI-powered consulting-led solutions give us confidence in delivering long-term value to our clients. Returning to profitable growth remains our priority. Based on our visibility, we are guiding for a sequential growth of minus 1.0% to plus 1.0% in constant currency terms.
All right, let's also go across to Shrishti. SIAT reported its numbers yesterday post-market hours, and how were they? Shrishti, tell us.
Well, it seems
seems to be a mixed bag coming in from CEAT this time around, because this time when we look at the profit figure, that has seen actually a decline of 9% on a YY basis, while the revenue has seen a jump of 11%. This was of course led by the demand from the OEMs as well as the replacement demand. But if we look at the export data, they were actually quite flat. But if you look at the margin figure as well, there's a bit of a disappointment coming in, because on a YY basis the margins have actually shrunk. And not just that, even the management was indicating the fact that going ahead they are expecting a bit of a jump up because of the raw material inflation cool off. But it's actually happening quite the opposite. The gross margins even too have contracted 250 basis points on a YY basis, and 70 basis points of contraction on a sequential basis is what we have seen. So all in all, not a great set, what we call it, coming in from CEAT. But apart from the numbers, the company has also announced their capex addition, where they have announced capacity addition for the Chennai facility, when the existing capacity will be enhanced by 35%, and this will be done at a cost of 450 odd crores, which will be financed through a mix of internal accruals as well as debt. So that's the commentary coming in from CEAT this time around. Not a great set, but yes, of course, with the con call at 4 p.m. today, we will await for more details and the outlook going ahead.
As it will be reacting to its numbers today. Shrishti, thanks so much for joining in. But shifting focus to from review to now previews, then two Nifty companies will be reporting their numbers: JSW Steel and Reliance. First up, let's put the spotlight on JSW Steel, where on the top line we are expecting some bit of degrowth on a sequential basis. Revenues are expected to decline by about 6% QOQ. Remember, the company undertook planned maintenance shutdown at their Dolvi plant, and that is expected to weigh heavy on JSW Steel's top line growth this time around. Volumes are expected to decline 9% on a QOQ basis, but remember, margins are expected to expand, spreads are expected to expand. In fact, we are expecting EBITDA per ton to come in at about 11,200 rupees per ton, which will be a solid 27% growth on a sequential basis. Steel prices rose on a sequential basis, so that is likely to aid numbers and spreads in this quarter. And remember, coking coal prices also declined, so dual benefit is what we are going to see as far as spreads is concerned. So all in all, barring the top line degrowth, we are expecting strong set of numbers from JSW Steel. But any kind of management commentary on the Bhushan Steel and Power resolution plan, on steel prices and coking coal pricing trend going forward, and that capex plan will be something that the street will be watching out for. But apart from JSW Steel, remember, Reliance will also be reporting its numbers post market hours today. On a consolidated revenue level, we're expecting net revenue to come in at 2,45,700 crores, which will be a decline of about 6% on a sequential basis. But remember, EBITDA is expected to see an uptick of 2%, and margins, they are likely to come in at 18.3% versus 16.8% that the company had reported in the previous quarter. Now, as far as segment-wise performance is concerned, remember, digital segment is expected to report strong numbers on account of tariff hike in the telecom business that the company had undertaken. So, digital services EBITDA could rise by about 4%. However, on the flip side, we are expecting retail EBITDA to decline by about 2 to 3% on a QOQ basis. As far as their O2C business is concerned, that is expected to see an uptick. In fact, EBITDA for this segment could rise by about 5% on account of higher margins in the quarter gone by. But let's also put the spotlight on Reliance Jio in particular, where we are expecting strong set of numbers. Now, for Reliance Jio, management commentary, of course, on tariff hikes will be crucial. But apart from that, revenue is expected to come in at 31,100 crores, which will be an increase of 4% on a sequential basis, and margins are likely to be steady at that 53% mark. But remember, ARPU, average revenue per user, will be a key metric to watch out for as far as Reliance Jio's numbers are concerned. Last quarter, it came at 206 rupees. We are expecting that to inch up higher by 2%, and it could come in at 210 odd rupees. In fact, Jio could also add about 9.5 million subscribers in the last quarter, as compared to 6.5 million subscribers that added in the fourth quarter. But of course, all eyes will be on the tariff hike in the telecom sector, and any commentary around that will be crucial. So yes, Kanishka, JSW Steel and Reliance Industries, both companies from the Nifty pack, which are all set to report their numbers today.
That's right. So JSW Steel and RIL, two very important counters to be tracking today as they are going to report their numbers later in the day. But on that note, we're all timed out on this edition of Market Cafe. We'll see you Monday, but don't go anywhere as the market will take all the action forward.
From managing wealth to headlines, he has shaped investment journeys across India. And now he is curating the newsroom. His views moves markets. And this time, he is setting the agenda.
Hi, I'm Swarup Mohanty, the guest editor on ET Now. Catch me on 21st July, leading the conversation.
When the stakes are high and the answers are elusive, there's one voice unafraid to challenge the status quo.